Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, let's go over Tesla and let's go over the market. Remember, today was a shorter day, about a half trading day than the normal hours, and tomorrow is an off day for the 4th of July for Americans. So happy 4th of July to my American viewers. I'm Canadian, so obviously don't celebrate that, but we had Canada Day. But nonetheless, let's go over it. Let's go over what happened today and what we can expect moving into the rest of this week, starting Thursday Wednesday. I'm getting all the days mixed up. And let's figure out what we can expect essentially moving forward. So all that being said and done, Tesla with a beautiful run up of about 6.5%, putting us at $278.63 per share compared to the market. Obviously a significant outperformance. And of course, as I'm sure all of you are aware, or hopefully are aware, it's of course off the backpedaling of the delivery numbers that came out for Tesla, which they beat about 15,000 or so, I believe it was, delivery numbers. The projected was about 466, I believe. And I think, 446. And I think they did 463, something like that. Again, don't quote me on that, of course, but it's around that general ballpark, which of course means that Tesla beat by about just over 4% on the delivery estimate. And of course, with the beautiful rally following that sentiment. Now, let's discuss though, what is happening here, right? So we discussed pretty much on Friday, and I said how I entered a small bullish position. Thankfully, so I do make money on this move as well. It'll be pretty painful to sit this one out entirely, so that's why I entered a small bullish position, so I can enter at least some of these profits here. And it obviously did go up to the to the north side essentially, right? We talked about how it was do or die, right? You can easily fall out and backtest this easily. Or, of course, if the delivery numbers are great, it can just completely rock it out and continue playing out this overall bull flag breakout, which clearly we know which one has, ended up winning, I guess, right? Now, we did end up coming right over to my resistance of around 280 to 282. You can see this line over here, which we've before in the past had several touch points, a lot of, high volume trading there for the most part, right? And, overall, a lot of resistance around this general area. And then the next level, of course, up will be 290, followed by 300, followed by 315, right? Those are the upside target levels. Now, however, with that being said, this is a moment of caution, in my opinion. I'm personally hardly trading Tesla right now, well, at least up here, other than that small bullish position that I have that I'm letting play out, right? Other than that, I'm not very interested in buying Tesla here. I'm not interested in puts. I'm not interested in anything. I'm just kind of waiting on the sidelines. I'm actually trading Disney personally, which I'll go over at the end of the video very briefly. But, it is a half a day, so it's kind of hard to put too much weight on today, mainly because, again, it is half a day, right? Who knows what could have happened? Maybe you could have won even worse. Maybe you could have won even better, right? In terms of the actual candle itself, not the actual percentage movement, right? But the candle itself is not the best looking candle, right? It is an inverted, hammer candle. Not a very looking, bullish candle. It was a lot worse earlier when it went all the way back down to not gap fill, but to retest this overall resistance that we had over here that we, got rejected by around 275. If it ended around there, this would have been a horrific candle. But even then, it's not the best looking candle. But the thing that worries me the most personally is, again, we have a lot of resistance right above, being the main one, of course, the red line, which of course is going to be very, at least in theory, it should be difficult to break. You never know with Tesla, of course, but that's not far above us, right? That's going to be pretty much just barely entering the $290 range, right? So that's number one. That's a area I am personally very cautious about, and that's why I am not interested in any long positions. Even though I do believe that there is a chance we still go up to about 290. All the FOMO and everything, people FOMOing in really hard on Tesla, absolutely possible. But I'm not willing to take that chance personally. That's just my trading style. That's just how I do it, and that's just my method, right? But with that being said, again, not the best looking hammer candle inverted hammer candle, essentially, right? Not the best looking. I wouldn't say it's completely hideous, but it's absolutely not great. On top of that, again, the resistance above, and on top of that, the most important thing for me is the fact that the RSI is just making the most obvious bearish divergence I've ever seen, but pretty damn obvious, right? Where you can see we did break new highs, right? We went above this high, which is where we set the highest level of RSI we've seen in Tesla for a long time, really, which was almost at 90. And now we're, of course, closing candles higher than this by, I think $4-ish, which isn't bad. But with that being said, it's only at 72 RSI. So an extremely obvious bearish divergence. So that's not a good sign to see, right? If you go to the 3 hour, for instance, you can see a little bit more obviously, right? So if you even go from the tippity top over here, you can see very obvious bearish divergences, as this one on the 3 hour, for instance, was set at 258 right here roughly, right? Then we went higher, RSI went lower. Then we went even higher again, RSI even lower. So just keep that in mind, right? Usually when I see these things play out like this, that to me is a sign of caution. Obviously, if you don't want to take it as a sign of caution, it's completely up to you. I personally do, and I personally will be staying away for now until I see some cool off from overall this move that Tesla has had recently, right? I'm not interested at the moment. However, with that being said, the 1 hour is not looking too bad on the RSI, right? The 1 hour is suggesting to me that, yeah, there is a potential for a little bit more upside move, in all honesty, right? It's not looking too hideous just yet, right? It can potentially go a little bit higher, but the second you start entering the 2 hours, the 3 hours, the 4 hours, the daily, that to me is telling me that it is definitely setting up that bearish divergence, and I'd be a little bit cautious on the kind of short to medium term-ish trend. However, with that being said, moving over to the weekly, however, you can see not looking too bad. It is entering overbought territories just ever so slightly, right? Ever so slightly, or it's pretty much at it, or at the breaking point, if you will. But no bearish divergence on the RSI nor the monthly. So those two don't look too bad for me. So what does this mean to me personally overall, right? This is just my personal opinion. To me, this means the fact that we don't really see 1-2 obviously yet on the 1 hour, the 30 minute, means that there is potential for a little bit more room to the upside. Like I said, potentially even truly retesting this red line of around $290-ish. However, again, 2 hour, 3 hour, 4 hour daily is showing an extremely obvious bearish divergence, which tells me that the short to medium term-ish time frame, maybe like a month or so, maybe even 2 at most, is looking a little bit like, a little bit of caution is warranted. But with that being said, the mid to potentially even slightly longer term looks pretty darn good so far. It doesn't look that bearish to me on the weekly and the monthly. So again, to me, that tells me that even though there's extremely short-term movement potential to the upside, I do think that there is caution warranted. I do think that there is a cool-off potentially on the horizon based on how these timeframes look to me right now, and the daily especially. But after that cool-off, assuming nothing horrible happens, Tesla looks like it's still in a pretty damn overall good position to go even higher after that. So again, that's kind of the way I'm seeing it. Taking a quick look at the Bollinger Band, you can see once again retesting the green line of the Bollinger Band. There is something I do want to mention very quickly actually, and that's going to be this section right here. To me, this current move that we're seeing right now is very reminiscent of what we see over here, right? Same concept. We went really low, then we completely just exploded up to the north side. Pretty much the exact same thing happening right here, completely exploded to the north side. So this right here is essentially this right here, right? Very similar idea of just explosion to the upside, very little red and pretty much a straight green. And even when there is red, it's extremely minimal for a day, maybe 2 at most. And after that, we just continue moving upwards like nothing's stopping us whatsoever. And that's kind of what I'm seeing here, right? And I personally believe we're somewhere around this level right here, where right, so this is where we were earlier. Then we had that drawdown to like the 240s, roughly 250s. And then we had a rally, which is, I believe, where we are right now, where it actually went even higher and is starting to close even higher than it did back over here, which is exactly what's happening, right? This is that move I just talked about. That's the retrace that I just showed you. And now we're going up and moving up even higher and closing even higher, pretty much right around what this candle did right here. And then of course, then it went back down, then it went up again, a bit of consolidation essentially before an overall cool off to the downside, right? And that's kind of what I expect, something like this right here, which I think will bring us somewhere to around, potentially this gap fill even, right? Again, we'll take it level by level. That's just kind of a, something that I am seeing. Doesn't mean it has to happen. It might not even happen whatsoever, but that's just something I personally see similarities with. And of course, I am kind of watching very closely, but at the moment, again, not interested in trading it personally. So that's just kind of the main things I am seeing right now, right? The 21 EMA is still well below us as well at 246. So, we'll see. We'll see. I personally, even if I do think there's more upside, I personally will be staying out, waiting for the cool off to begin, and then I'll start, really eyeballing it once again, much more aggressively and much more heavily. What the hell? Did the price just move while the market is closed? That was weird. Did you see that? I don't know. It was weird. The price like jumped up to like 279 and then back down to 278. I don't know what happened there. Actually, speaking of which, maybe this chart's glitching out. What did Tesla actually close at? 279 it says here. Here it says 278. That's kind of weird. Let me refresh this. Let me save this. Let me refresh this. It's very strange. It still says 278 here. Yeah, I have no idea. Very, very strange. Whatever. Anyways, pretty close regardless. Same price level, right? Now, the final thing I'll very briefly touch about is I've been talking to this in my member section on YouTube, was Disney. I was talking about how Disney to me looks pretty damn decent at this level right here with the stop loss not far under, which is around 85, right? And I was pretty much buying it right in the 89 area. It's at 90 and a half right now. And it's looking pretty decent, right? It's a descending wedge, which usually plays out to the bullish side, right? Potentially, an inverted head and shoulders here, like something like this roughly, right? Which isn't looking too bad as well. It's also trading at extremely decent support levels as well from the past. You can see for Disney, right? It's pretty much trading at the levels it was trading back in like 2014, right? Back all the way over here, and some decent support levels sitting around 91. So Disney will really need to break above this kind of 92-ish level for me to really be happy about it. But I did enter a light bullish position around 89, and I'm kind of riding it, and I will add more as long as it doesn't go down below 85. That's kind of what I am personally seeing right now for Disney, and I'm liking the way it's looking, right? It hasn't really followed this rally. It's definitely showing some weakness, so it is a higher risk trade because it is technically still looking a little bit bearish. But I personally think the risk versus reward somewhere around these levels down here is not bad. It's not bad, and I am willing to take that risk personally. So all that being said, thank you so much for watching. Again, don't forget, tomorrow the market is closed, so we'll see you guys on Wednesday. So until then, have a great day. Peace.